by 0.1% in reported currency. And if you recall, last quarter, we had talked about seeing green shoots in consulting business. In fact, the traction continued in Q4, reflected in Capco's sequential revenue growing by 6.6% and order bookings growing by 43.6%. Now, talking of order bookings, in Q4, our total order bookings stood at $3.6 billion, and for the full year, it was $14.9 billion. And now coming to the large deals in Q4, we won 18 large deals against 14 large deals in the previous quarter. And in terms of TCV, our large deal bookings for Q4 was $1.2 billion. For financial year 2024, we recorded large deal bookings TCV of $4.6 billion. This was a growth of 17.4% as compared to the previous year. For FY24, our revenue was $10.8 billion in reported currency, and we continue to increase the percentage of revenue from our top 5 and top 10 clients. Also, we added 3 more clients to the $100 million plus bracket in FY24. 6 out of our top 10 accounts grew on a sequential as well as on a year-on-year basis in Q4. Moving on to margins, in Q4, we saw a further expansion to 16.4%. This is a 40 basis points improvement over last quarter. We closed FY24 with a margin of 16.1% and expansion of 50 basis points over FY23. Like I said earlier, we will continue to make investments in building capabilities and strategic acquisitions. In Q4, we took a majority share in Agne. I'll spell it for you. It's AGGNE, a leading consulting and managed services company servicing the insurance and insurtech industry. This allows us to strengthen our value proposition in actually a very fast-growing part of the insurance vertical. Expanding on our substantial investments in AI, in Q4, we launched the Wipro Enterprise Artificial Intelligence Ready platform with our partner IBM. This is a new service that will allow clients to create enterprise-level, fully integrated and customized AI environments. Now, let me share one example of a win in Q4 that came from an AI-powered solution tailored to our consumer business. A leading global apparel brand chose Wipro as its strategic partner to implement Gen AI solutions for driving their digital transformation. In fact, this involves implementing large language models to improve search, recommendation engines, and enable hyper-personalization at scale, all done responsibly. Before I hand it over to Aparna, let me share our guidance for Q1. We are guiding for a sequential growth of minus 1.5% to plus 0.5% in constant currency for Q1 25. And we expect margins to stay range-bound like in the last few quarters. The next few months will be crucial as we steer the company towards growth. As a passionate hiker, I deeply connect with these words. Franzunko Tabe, if you remember, she's the first woman to climb Mount Everest. And she said, even if it is hard, you can reach the peak if you climb step by step. And finally, I seek the trust and continued support of our clients, associates, partners, analysts, and of course, media as we move forward. Thank you. Let me now hand it over to Aparna to share more details on our financial performance.
Good evening, ladies and gentlemen. Let me highlight to you our financial performance for Q4 and full year ending March 31st. Our IT services revenue for Q4, we delivered a reported currency growth of 0.1% sequentially and minus 0.3% sequentially in constant currency. For the full year 24, our IT services revenues declined 3.8% year-on-year in reported currency terms and 4.4% year-on-year in constant currency terms. Let me also give you some color on our market unit performance. Please note that all the numbers are in constant currency terms. In Americas 1, we continued our momentum of strong booking in Q4. We booked 8 large deals in Q4, adding up to a total contract value of $587 million. For the full year, TCV grew by 24.9% in Americas 1. Q4 revenue for this market declined 1.8% on a sequential basis, while the full year revenues grew by 0.2% year-on-year. Our healthcare sector for the full year grew 18%. Americas 2 market unit grew 1.9% quarter-on-quarter on the back of strong performance in Capco, BFSI, high-tech, and Canada sectors. On a full year basis, the revenue in this market declined 6.1% year-on-year. Almost 60% of our revenues in this market comes from the BFSI sector. And as Srini mentioned in his speech, we're starting to see the return of stability in this sector led by Capco. In Europe, revenues decreased 0.1% sequentially in Q4 and decreased by 7% on a full year basis. While Germany and UK continue to remain impacted due to slowdown in demand environment, we are seeing some recovery in sectors like Switzerland and Southern Europe that sequentially grew 1.7% and 1.6% respectively in Q4. Southern Europe as a sector grew 14.6% for the full year 24 year-on-year. We also continue to see strong traction on the order booking side in Q4. We won 5 large deals in Q4, adding up to a TCV of more than $300 million in Europe. APMEA revenues declined 2.2% quarter-on-quarter and 4.5% for the full year FY24. Our strategy in APMEA has been to move towards higher value transformation projects and reducing low margin accounts. The success of our strategy is reflecting in our margin improvement for this sector, which has improved 235 basis points for the full year, year-on-year. In terms of the IT services operating margins, our continued rigor on improving operational excellence has helped us expand our operating margins by 40 basis points in Q4. This is after absorbing the impact of 2 additional months of salary increase that we rolled out effective 1st December 2023. On a full year basis, our margins at 16.1% has improved by 50 basis points. Our net income and EPS for the quarter increased by 5%. Despite being impacted by a challenging macroeconomic environment, it is encouraging to note that our EPS for the full year also grew by 0.8% year-on-year. The increase in the EPS was after absorbing one-time restructuring charges of INR 6.8 billion rupees during the year. We generated cash flows of $626 million in the quarter and $2.1 billion in the whole of the fiscal, which is at 182.6% of our net income in Q4 and 158.6% of our net income on a full year basis. This is our highest cash flow in recent years. Our gross cash as a result was at 4.9 billion and our net cash is at 3.2 billion. Both have increased year on year significantly even after completing our largest buyback in July of 2023. In terms of certain other important metrics that we have shared, our ETR is at 24.5% for FY24 as against 23% in FY23. Our hedges continue to be in line with our risk management policy. We are about $3.1 billion of forex derivative contracts as hedges at the end of Q4. Finally, I would like to reiterate the guidance for Q1/25 as stated by Srini. We expect our revenues from IT services business segment to be in the range of $2.617 billion to $2.670 billion. This translates to a sequential guidance of -1.5% to a plus 0.5% in constant currency terms. With that, I'll now hand it over to Sanuba and happy to take questions.
We'll now start the Q&A session. Please raise your hand if you have a question, and we'll pass the mic to you. Please don't start asking your question until you have the mic, because we want to be mindful about the virtual viewers and want to make sure they hear the questions. So, and please introduce yourself before asking the question. Thank you.
Hi, this is Veena from the Times of India. Few questions on the HR front, some hygiene and some otherwise. Wipro has witnessed a lot of top-level exits in the recent past. How do you view that? And is there what about your succession strategy? And have you evaluated within the company why this is really happening? Secondly, on your headcount has fallen. Why has that really happened? Does it have to do with the utilization? And also linked to that, would you now be going back to campuses like some of your peers? If so, then what would the numbers be? And then as far as hike goes, you just rolled out one in December, but what about this coming in this financial year? Have you planned out how to roll hikes are you going to look at tenure? Are you going to, what is the broader metric going to be? And since there's a lot of emphasis on AI and Gen AI, how many of your people are Gen AI and AI ready? Not just basic competencies, but advanced competencies. And how many of them are actually on projects? And how many of them are at the bench waiting to get projects? And I think my colleague Shilpa, she wants to ask.
Maybe we can give our executives a chance to respond first.
I will need somebody to help you with all the questions. If I miss out something, you please remind me, and a host of questions, and I'll answer all of them. Could be true. Good point, Chandra. Next time we'll do that. Next time we'll do that. That's a good point. So let me start with all the questions. The first one you spoke about, leadership exits, and you said succession. And on my right, there are two glaring examples of succession. Two individuals who started their careers in this company and have reached the pinnacle in their respective areas. So I think the company can take pride in terms of having a very well laid out succession plan. And there is no reason for anybody to think otherwise in terms of stability or what's happening in the company. So if you look at it the last few quarters and all that, it's fairly stable. Coming to campus hiring, as we had said, if you look at it, it's a combination of looking at demand, what is the utilization, and in terms of what is the hiring going to happen. If you look at it, we have been able to significantly improve our utilization in this quarter. And it's an all-time high, and we hope that we are able to sustain and improve on this. We've been able to reduce our bench, which was there, and deploy people faster. As you know, and we have been speaking about it, the year before last, we had gone there was a huge demand post-COVID. We had gone to the campuses and made a large number of offers. We are still to finish all those offers, as we have promised that we will first, make sure that all those offers are honored before we go ahead and hire anybody else. So that's the plan as we move forward. We will induct freshers into this year, and I don't have a number right now. It depends on demand led, and you will hear from Srini and Aparna. We heard the macro environment continues to be uncertain. And the last point is, we've just given our increments, so I don't know you're asking me for what next increments. I don't know about that. So there is no clarity in terms of when and how much, but very clearly December 1st is when we did our increment cycle, and we'll see how the market is, what's the trends, and we will do what is required. Last point is on AI. Have I missed anything apart from that? So good. So on AI, we've spoken about it in the past. First of all, a lot of pride in terms of making sure that at scale we have covered more than 225,000 employees at AI 101, basic level of AI. Second is in different domain areas, we are looking at having advanced courses for people. And depending on the kind of POCs and the projects which we are doing, people are getting deployed. This continues to be a big priority for the company. This is about making people ready for the future. So that will continue as a big focus area in the coming year. I hope I've answered all your questions. Thank you.
Do we want to let Shilpa go? I think, sorry.
Yeah. Sir, Shilpa from the Times of India. Srini, many congratulations on your new role.
Can you bring it closer to you?
Yeah, I also have to ask you this. Wipro has seen several CEO transition, internal, external, joint CEO model, outsiders. When do you think Wipro will deliver predictability in performance? It's lagged peers by margins, by revenue. It's become the fourth largest IT company. So I just wanted to understand from you that there's been so much restructuring in the company. It has remained work in progress. But how do you think from here on you'll bring it to steady state, and from here the company is going to really fire up? So I just wanted to understand from you, what is your strategic plan going to be? Is there going to be a further restructuring and unsettling? And when do you think things will really look up from here on?
So let me answer the first part of the question. Number one, as a company in the last few years, 4 years, we went through a transformation journey. And I just called out the 5 priority areas for us this financial year for us to bring the growth back, right? Whether it's to do with the large deals, whether to do our account growths, working with the partners and the clients, right? Also the simplified model, and we want to continue, doing that. The business solutions that I talked about, and building this skills at scale that Saurabh just talked about. So the focus right now for us this year is clearly, execution rigor with speed. Now, if you look at the building blocks that we have in terms of building consulting capabilities, right? We have acquired Capco, we acquired Rising. That makes us dominant in those areas, and we will continue to look at opportunities to build our consulting capabilities. Second, you heard about AI. Every solution that we're going to take to the market, every customer conversation will be AI infused. So that's another one which we can, we would like to take it to the market and differentiate. And these solutions will be a lot more industry specific and very, addressing the specific business needs of our clients. Now, coming back to the last part of your question in terms of when will you bring the growth back? I think 2024 was a tough environment for everyone, right? There still continues to be uncertainty as we speak. But with the strong foundation that we have and the execution rigor with speed, right? In the long term, I'm very optimistic. In short term, we got to take it step by step and keep evolving our priorities based upon the market conditions. And of course, the technology evolution, you never know how Gen AI would turn in the next 3 to 4 months. So that's how we want to stay focused on.
Hi.
Thanks, Shilpa.
Hi, Haripriya from Reuters. Srini, first of all, congratulations. 2 questions for you. One, I wanted to understand, like you said, just a follow-up on what she said. You said you want to continue to simplify your operating model. Wipro is already known to have a differentiated structure as opposed to your peers. Will you see that changing moving forward? 1. 2, what would you do different from your predecessor to sort of right the ship? That is my second question. Also, in terms of the growth metrics for Q4, Aparna, this is for you. I want all, except healthcare, if I'm not wrong, everything has seen a decline in terms of revenue. When can we sort of expect to, what are the factors, and when can we start to see some sort of like positive figure on that front? And on headcount, I understand this is an industry problem and everyone's seeing a decline, but when can we sort of start seeing any incremental addition at all? Yeah.
Sorry, I got Reuters, but didn't get your name.
Haripriya.
Haripriya. Hi, Haripriya. Thank you. Going back to your point on the simplified structure, we clearly called out 4 strategic market units and 4 GBLs and functions. We're going to stay with that. It's a very simplified market. You're very close to the clients. Now, within these markets, we are bringing in sector focus, right? If you look at a good example is in the US or the Americas, where you have banking and financial services, E&U, and so on, so healthcare, life sciences, consumer, and so on and so forth. So there we're going to bring in a lot more industry vertical focus. So the idea here is when you go in front of a large client and when you go and want to provide a solution to them, you've got to understand the customer's domain. You need to understand the customer process areas. The way we want to do it is consulting led. So the consulting will be the tip of the spear. Like I said, AI infused, and then we make sure we map the customer process for those specific industries. And the solutioning team will be taking that approach to our clients. And what is this? Yeah, I think that's how we want to take it forward. What will you do different? This is what we want to do different. Consulting led, AI infused, it's very specific to industries. And we want to call out what are those large accounts that we have. We also want to call out what are the future large accounts that we have. And we'll work very closely with our clients and partners. And we're going to be a lot more proactive with them. I think that's the approach we want to take going forward. Thank you.
Chandra?
Well, yeah. So to answer your questions, Haripriya, on the sector performance, if you look at our quarter-on-quarter performance, we've spoken to you, perhaps since the last quarter that we are seeing green shoots now emerge in our Capco. Now that's reflected in our BFSI performance for the quarter. You're seeing a sequential growth. We are encouraged by the growth this quarter. It has happened on account of 3 counts. One, Q3 is a seasonally, a furlough quarter, and therefore it helps. 2, we're seeing a bounce back in Capco. We spoke about how Capco has grown quarter on quarter 6.6%. So that's aiding the performance in the sector. And overall, we are seeing some early signs of stability. Now, healthcare has done phenomenally well. That's our other green shoot that we've had. We've grown 19% year on year, and we're gaining market share. Very happy with the way the sector is shaping up. In terms of VNU and manufacturing, this year has been soft for Wipro. I think from an industry standpoint, they're not as impacted. There is potential for us to do better in these sectors. We are looking at building our muscle. The pipeline looks good. Hopefully, in the second half of FY25, we should see some rebound. So that is to give you some color on the sector performance. Your question was on headcount. Like Saurabh said, headcount growth is a reflection of the overall demand environment and the levels of utilization that we are comfortable with. I think the Q4 utilization, we managed a reasonably good number. For us, we will need to sustain there. So headcount growth will now depend on the overall macroeconomic environment improving and discretionary spends of our clients improving.
Chandra. Hi, Srini. This is Chandra Shrikant from Money Control here. Hi.
Oh, sorry.
Hi. Congratulations, and here's wishing you the best. I just want to start by asking you, what was Rishad Premji's mandate to you when he told you that you're going to be the CEO of Wipro? What are the 1 or 2, 3 things that he wants you to do? Secondly, how are you going to sort of, improve the morale of the organization? Your first letter to employees, I think you mentioned, hiking and how it's important to take success and defeat in your stride. But there have been so many senior management exits in the last few years. So how are you going to take up the morale of the organization? And thirdly, experts we've been speaking to have spoken about how this Wipro underperformance is not a 5-year or a 3-year phenomenon, but something that's happening right from, FY08 to 11. I mean, I think barring those years, it has underperformed its peers for a pretty long time. So have you given yourself a target on how long it will take for you to turn around and, bring back momentum
momentum, which has been missing for the last decade. Aparna, one a tailwind that your peers at TCS and Infosys have highlighted is, on-site inflation, because of which they will be able to take some pricing hikes. Are you also seeing that among clients? Can that be a margin tailwind going forward? Is 16 the lowest? When do you expect it to come back to the late 1920 range? Saurabh, a lot of people have asked you already about the headcount decline. Is this an industry-wide issue? Is it because of utilization, excess hiring during pandemic? Or is it a wider change in the way hiring happens? Because you're not the only company to show a decline in headcount. We've seen it happen for TCS for the first time in 20 years, Infosys for the first time in 20 years. So is there a larger issue at play with respect to hiring? Thank you.
Thanks, Chandra. A lot of questions. The conversations I had with Rishad, obviously all of us and the board and Rishad wants growth, right? How do we drive growth? How do we accelerate the growth that we have from where we are today? So in that context, what are your priorities, right? So I had to call those 5 priorities out, and I did share in my speech. So I don't want to repeat that. So that's number one. Second, you're talking about the exits, right? The way I see it is that we have a simplified structure and a model that we're taking to the market, and we're going to continue with that aspect of it. As far as the leadership is concerned and people are concerned, it will continue to evolve. What we want is we want to have the right set of people for the addressing the right client in the right industry, and we'll constantly keep making sure that we have the right people from within or from outside. So that will be a continuous and evolution process, and every industry, every company in every industry does that. So that's a very natural progression, if you ask. Now, coming back to specific focus on your question on Wipro underperformance and also when you're going to get the growth back, all I can say is that if we execute our priorities with speed, it could be much ahead of what we are planning right now. But I can't give you the forecast of when the growth will come. And Aparna and I shared the growth for next quarter, and we'll come back and talk about how the next quarter looks. So that's how we will take step by step.
I see.
Right. So on pricing, the environment, in the last fiscal, that is for FY24, remained quite competitive. There is pressure in pricing because revenue is something that everybody is very concerned about. So the market environment is very, very competitive. There is pressure. That said, there are pockets where we are pivoting to high value transformation projects, or Srini spoke about how consulting is going to be at the tip of what we sell. There we are able to secure some premium. So the overall, I would say there is pressure in some pockets, especially in the efficiency led offerings, and we are able to secure premium in the newer technologies and newer areas and newer solutions that we are taking to the market. So overall, I would say for now, it is stable, right? As far as operating margins are concerned, you spoke about 19 to 20%. Like Srini said, first of all, we don't guide for margins, and like Srini said, we right now expect our margins to remain range bound. What we have done well, though, like I said, in a very, very tough revenue environment, we have improved our margins this fiscal by 50 basis points. This has happened on the back of the excellence that we are driving in operational rigor. We have several levers at play, including fixed price productivity, pyramid, the rotation, skilling, internal fulfillment. So there are many aspects that we are working on, and we are able to see results that are playing out in our margins. So we are quite encouraged. As we look ahead, we will continue to exercise these levers and also perhaps drive synergies in our G&A spends, with our acquired entities. So those are some levers that we've been driving, and we're seeing results. And like Srini said, we'll take it step by step. For a meaningful improvement in margins, I think the revenue environment needs to improve.
The last one on headcount. My perspective and our perspective is that what you're seeing as a trend today across, and everybody, as you said, have reduced headcount. I think given the tough macro environment, everybody is focused on improving operational efficiency. So what you're seeing here and now is very much in terms of better utilizations, better operational efficiencies, lower demand kind of stuff. It may be a bit premature to say that this is long-term because of impact of AI today kind of stuff which is seen. That could be a trend in coming months and years and, kind of quarters as we move forward. But right now, I think, and more specific to us, we are driven more from, and we had headspace to drive operational efficiency. And that's where we are today.
Hi, Ina from Economic Times.
Can we have Ayushman from Business Standard, and then we'll come to you, Bina, right after.
Okay. Sorry.
Was there another
Something
question?
left, Chandra?
But he's exits.
I spoke about it, right?
Hi. Ayushman here from Business Standard. Srini, hi. Congratulations on your new role. Just two small things to ask you. Your predecessor Theory had made a lot of changes, structural ones, and both in terms of large deals teams, which was brought in there and then again dismantled. Among all those changes, are there anything that you plan to undo? That is number one. And in terms of acquisitions, again, Theory was very aggressive in terms of acquisitions. So what are your acquisition plans? If yes, would you look at building capabilities or look at expanding into newer geographies? Thank you.
Sure. So thanks, Ayushman. Let me answer the second part of the question first, the M&A part, right? Yes, we will be bold on M&As. Yes, we will look for white spaces, whether it's to do with the markets or whether to do with the capabilities. And that is something that, we will continue to do it. And in the new context of, having consulting-led, right, we will also look at very specific industry sectors where we think, we want to actually invest and, bring in more capabilities. So that will continue. There's nothing on. Now, coming back to the previous point where we had I was part of the transformation program along with Theory, right? So I was part of that. What we did at that point in time is we wanted to build in a consistent process for whether to do with deal sourcing, deal creation, and of course, deal closures. The entire process, we wanted to create a standard template with tools and templates across the organization. And over the period of 2 to 3 years, as we matured, we felt the nuances of the markets are a lot more important because how you do a business in US versus Europe versus Asia Pacific or Africa, things change. So we said, let these teams actually sit in SMU, and I was running one of the strategic market units. So we created that, but we leveraged the process, we leveraged the templates and tools, and we have become more independent. So that's how, and we also created systems where there's a lot of repeatability and reuse of all assets that we have at an organization level. And the closing point from my perspective is that it's extremely important for us to stay focused on large deals and go through the process.
So you don't plan to change anything? Okay, thank you.
Hi, this is Bina from the Economic Times. Srini, you mentioned that next 3 months will be very crucial. If you could just take us through, in the last few days that you have taken charge, what have been the key pain points or things there where Wipro lacks that you want to focus on immediately? And if you could also tell us, based on your conversations with the clients, what is it that they are telling you in terms of the market, especially Wipro's growth areas? And secondly, we've seen the disruption around AI and headcount decline across the industry. Do you see that hiring will no longer correlate to growth of the sector overall? Do you see it not being divergence from the revenue growth overall across the sector or maybe for Wipro? And would you be going to campuses when you said that you would be
hiring freshers? Would you be looking at campuses, or in what form will the hiring be? And lastly, what was the impact of the hikes that you gave this year?
Maybe the last two questions I'll ask Saurabh to take. And the first two questions, the focus areas and what we are seeing with the clients, right? And in the context of AI. Personally, I think this is my second week in my new role. So what I did was met and discussed and took inputs from our senior management team. I've addressed thousands of our employees, of course, virtually, which is much easier to address them. Did talk to them about the 5 strategic priority areas for this financial year and how we want to do that, right? And also for them to know a little bit of who I am, right? So that was the conversations I had. I think the team is excited. I've got thousands of emails and WhatsApp messages to our own Wipro dot telling me that, Srini, we are with you. Now let us know what's your strategy and how do we execute? What does that mean? The execution rigor with speed, right? Now, so we will continue with that. Second, coming to clients, and I just want to give you some context of, I want to give industry view. If you look at healthcare in the United States, they have been very laggards in digital transformation. But if fast forward to last financial year to this financial year, where Aparna talked about the growth that we got, they are depending a lot on AI, whether it's from a technology aspect of it, bringing in productivity around coding, testing, and those aspects of it. Second, on the operations side, how they do scheduling of nurses, how they do contact center productivity improvements, and so on and so forth. They are also looking at areas of business growth. So the point here is AI will help us bring in productivity from the technology part, but it also gives us opportunity for us to impact the business and operations for our clients. And that's another area we want to train our employees. And that's why I said our skills have to be AI ready, but very specific to business or industries that we want to address. In terms of the correlations between AI opportunities versus the headcount, maybe Saurabh, you want to cover that?
No, I called out, immediate headcount reduction has happened primarily driven by the market and demand environment, as well as the operational efficiency which we have driven, which is reflective in our margins. We have a correction of margins. We had headspace to improve our, operations utilization. We have seen that. Long term, yes, as we move into more IP-based platforms, AI, there could be a divergence coming more and more in terms of headcount growth. But we still, if you look at our entire portfolio, there's a large number of work which we do with our clients where it is manpower intensive. So it's a combination of both as we move forward. And I would suppose this will evolve over a period of time, instead of, giving a very firm view today. And that's one. Second, on the campuses which you asked for, and I'm again repeating myself, we, as you know, during COVID era and post that, we had done several additional offers at that point of time whom we couldn't absorb. And we have committed to everybody that we will first honor those people whom we had made offers. So we are making those commitments to people as we onboard people before we go back to the campuses. I think so that's the way we are approaching it.
Haripriya.
Aparna, the impact on the hikes, if you can.
So I'll give you a walk of how our margins played out. I think for the quarter on quarter, the 2 additional months of salary increase gave us an impact of 50 basis points, and operationally we improved by 80 basis points, and that's the net movement on the margins.
Hi, sir. This is Haripriya from the Hindu Business Line. Broadly in the industry, the focus is majorly on cost takeout and all the vendor consolidation stuff, but you're saying you're morely going for consulting and AI. 2 difficult spots, consulting, given the macroeconomics, and AI is still very nascent in nature. So why make these difficult, riskier bets? And yes, in terms of the margins, for the longest time, 17%, what you said was aspirational. And I don't think so in the longest time we've mentioned that to be your aspirational level. Again, you're mostly concentrating on being range bound. So is that more so? And do you still keep 17 as your aspirational level? Yeah. Okay, thanks.
Thanks, Haripriya. Let me answer that question. I think I need to clarify this, right? you can deploy AI both in the context of cost transformation and also business transformation. So the cost transformation is all about the points that you made, including the vendor consolidation. What I was talking about is how do you deploy AI in the context of operations or your application support or infrastructure support and take the cost out for the customer, who in turn can actually put those budgets into business growth, right? So AI is not just for business growth, it's also for cost transformation. In terms of the vendor consolidation, yes, we are right up there. We are working on multiple opportunities around vendor consolidation, and it's something that will continue to happen. And the better you are in terms of the cost transformation, I think the client gets a lot more interested in around that. And sometimes we have to disrupt their business as well.
17% operating margins is certainly an aspiration that we continue to hold. Like I said, we have made a journey from 16.1% in Q3. We delivered 16.4%. So that's the journey that we've made. 17% is certainly an aspiration. But like I said, we also have to invest for growth. And for us to meaningfully improve our margins, we must also see an improvement of the revenue trajectory. So those are the factors at play.
Hi everyone, Rishabh here from Money Control. Firstly, congratulations, Srini, from one hiker to the other.
Thank you.
I hope to go. I shouldn't be saying this, but hope to go on a hike with you someday.
Please come. I just gave a hike to. If you want, I can share with you.
Yeah. So on the America's business over the past couple of quarters, we have seen you have improved your share. But in Europe, there's some tepid demand. So what's the reason? What are clients saying there? And to Saurabh, how many offers are pending yet? That's all.
So maybe I'll take the Europe question first. If you look at in the last 4 years, Europe really we saw a significant growth coming from Europe across the countries that we operate in. But last year was a soft year. But if I look at the Q4, we did a very strong order booking, almost 4 deals at $300 million that we did. So the point I want to make is we are seeing some order bookings that are happening and some green shoots. But you're right, Europe was a little bit slow. Second, it also varies from country to country, whether it's the way you look at Germany, Switzerland to UK or Nordics. And there are certain projects in certain countries that have actually come down. And now we are waiting for the new projects to actually pick up to bring the growth back. And we are focused on that. And there are, I think, pipeline and deals are also there in Europe. And I'm hoping that converting those, we should get the growth back. But I can't define the time frame right now.
I've forgotten the question you had for me. Offer spending. It's not an easy question to answer. You have to apply some AI there because because it is constantly changing. And what we do is when we ask people who are still interested because a lot of them have got offers. So it's difficult to give a number to you, but very clearly as we start, whenever we induct any freshers, first we go to the people whom we have offered and then seek from them and who are interested and then take it forward. So it's a very evolving and iterative process. That's what I'm saying.
Hi, my name is Rukmini and I'm from Fortune, India. I have 3 questions and probably we'll take one by one for everybody's convenience. Shri, one, since you mentioned that, you have to be making investments for growth, including some acquisitions, right? When we go back to the gross numbers, the Capco acquisition that has happened doesn't seem to be, showing that it's firing for you. And several of the analysts have also been, concerned about having Capco as a separate brand, right? And it's somewhat antithesis of the whole Wipro one. Some bit of understanding on what is happening on Capco front and the kind of margins that it was supposed to deliver. Is it firing for you?
It's a good question. Number one, Capco is a very strategic acquisition of Wipro. And we did it, like you're aware, Rupini, 3 years back, right? If you look at last year or so, the BFSI market, especially the discretionary spend, was much slower. And Capco is right up front in the context of that discretionary spend. The good news is that when there are green shoots in BFSI, it will be consulting led in terms of the conversations. And we have seen that in Q3, and now we have seen in Q4, both on the order books as well as the revenue. So that's the good news that we have 2 consecutive quarters wherein the consulting revenues in the banking and financial services is going up. The second part of your question is, we're going to use Capco as a consulting led, right, in any of the solutions that we do, whether it's a banking services, banking, financial services, insurance, and they also have a very strong energy and trading capabilities. So then we are tipping the spear as we go into the market. And what we need to do is bring in a lot more synergy, and we have seen a lot of synergy deals happen, and we'll continue to focus on that and bring in the more momentum so that Wipro and Capco will continue to be there. And Capco as a brand will continue to be there as a Wipro company.
Srini, isn't 3 years like a good enough time for it to be firing and showing the kind of results that you would have expected?
I guess none of us forecasted economic slowdown, especially macro and economic slowdown in Europe. So that obviously had an impact.
Sure. The second one is also around when you said that your margins are going to be range bound. So how do I read it? Is Wipro looking at growth at all costs and you're not really worried about your profitability?
Aparna, you want to answer that question?
We've said that profitable growth is what we aspire for. Like I said, revenue is important. At the moment, there is a tough macroeconomic environment where our clients are also going through a very challenging time. We are staying close to them. We need to be partnering with them at this point in time. So we need to be very focused that we, like Srini said, that we are right up there on all vendor consolidation. Right? Now, these are things that are good investments to make for the business. Margins, 17% that we had shared, I think, a couple of years back, continues to remain a milestone that we will track and that we, hope to achieve. Except that, we'll have to also take into cognizance that the last 4 quarters have been particularly tough, and we've executed on a cost optimization plan in that environment. So we need to remain balanced.
Ma'am, but even if you're looking at the entire industry or even your peers, right, profitable growth is something that is almost illusional, right? Either you're growing or if you have to chase revenues, then you're going to give up something, right? It's not that they're going to come to you at a margin that you aspire.
It's not delusional at all. In fact, it is very much achievable. There are enough. I can't talk about the industry. I can't talk about the other peers. But as far as Wipro is concerned, there is a charter that we can execute to. We do see opportunities for us to improve profitability. That remains a firm aspiration. But we need to do it in a balanced way and keeping revenue as number one priority.
One question to Saurabh. Sir, given that somebody who's been in the company for 30 odd years is now at the helm, will there be some sort of ghar wapsi when it comes to other executives?
So, talent, anyone, and this has nothing to do with Srini, but across, we will continue to look at best talent to come into the organization. Who have worked with us in the past, who have not worked with us in the past, absolutely. So that will be our way of going forward.
We have one more question. I think Padmini has the mic. Yeah.
Yeah. Hi. So I'm Padmini from Financial Express. So your revenue from Europe has decreased, but your other Indian peers have gained share in that region. So can we translate that you're losing market share to them in that region? And going forward, in which verticals do you see growth and where do you see headwinds? And you said that you're seeing some green shoots in your consulting business, but some of your peers, especially Accenture, has said that they're facing a huge headwinds there. So how is it different for you? Where do you see it? Like how do you see where's a tailwind for you there?
I'll just add a few numbers to what Srini had already answered on the slowdown in Europe, right? For the last 2 years, Europe grew at 39% in one of the years, and it grew 12% year on year in second year. The last year, FY24, has been the year where we've seen some slowdown. We are very confident about our market positioning there. In fact, we are very, very firmly poised in all vendor consolidation deals in that geography. We continue to win. I think even in the second half of FY24, we would have cumulatively won about, 10 large deals there in that market. So we are continuing to win. The reason why you're seeing a decline is because of the discretionary spends coming down, which is a result of the macroeconomic environment. As that improves, you will see us returning to growth. We have certainly improved both our positioning and our capabilities in that geography. To you answer your second question was towards on where are we seeing green shoots, right? We are sharing with you what we are seeing, right? We've always remained truthful and honest to what we're seeing. We were the first to tell you that we are seeing a macroeconomic slowdown. We can only talk about what's happening in our clients and what's happening. So we are sharing with you that in Capco, we are seeing a rebound. We are encouraged by that. Hopefully, we will have to see that sustain, right? For now, they've done well in Q3 and Q4, and that gives us hope. It's a great asset.
Ladies and gentlemen, that concludes our fourth quarter and year-end fiscal 2024 earnings press conference. Please, if you have any follow-up questions that we haven't answered, reach out to our media relations team. We'll be happy to help you. Those in the room, please join us for refreshments outside. And those joining us virtually, thank you for joining, and we'll see you all next quarter. Thank you.